All right, this might actually be working. I think it's working. All right, give me just a second to get the word out. Okay. All right, it works. Everybody can hear me. Can you guys hear me? Testing, testing. You can hear the music. Looks like the quality is pretty good this time. Did not come in through Restream.io this time. So Restream.io is kind of what fucked up the last stream. But we're here on YouTube now. Hopefully everything's good. Mic's perfect. Music is good. Audio's good. All right, rock and roll. Hopefully, you know, we can manage to get a lot of that Periscope audience over here to check this out. Oh man, not a non. You feel naked. There's nothing wrong with being naked, guys. You know, it's perfectly normal and natural. Yeah, but let's go ahead and, you know, we'll start talking about a little psychology to kick this off, you know, while people trickle in here. You know, you guys know I like to start with discussing the psychology of things. So I gotta turn the music down just a bit on my side. So the markets, right? Bitcoin, stocks, you know, last week the sky was falling. You know, everybody was so worried that TradFi, you know, equities and things like that were going to crash. Apparently, like the 10-year yields and things like that spiked, and you know, everybody got a little bit spooked here. But the reality is, you know, I don't really see equities or anything bringing down Bitcoin, crypto anytime soon. This was kind of a chilling revelation in the sense that, you know, crypto is still very much correlated to these things. It's not like a hedge asset. It's not anything but a risk asset, and it's a high risk asset at that. So it's just something to it's just something to keep in mind, okay, as we move forward. You know, if equities do get ugly, if equities turn ugly, you know, you're not going to be safe in crypto. If anything, you're going to feel that more in crypto. You're going to feel those emotions. You're going to be impacted by that. For everybody here, you know, we got 160 people watching now. I know this is fucking stupid, but you know, do hit the like button. Subscribe to this channel. You know, we are going to be doing Shitcoin Church on YouTube moving forward. Yeah, Origin Feb in chat is saying the 10-year rates rose to a point, triggered some algo selling at equities. It seems to have leveled out. I mean, looking at like SPX 500 today and things like that, you know, S&P 500, we're seeing just absolutely massive bounces, and you know, we're seeing bounces in crypto as well. Now, one thing that I've been talking about for a bit is just how interesting it is that all the timelines that we're seeing right now are adding up almost perfectly with all the timelines and shit that we saw in 2017. You know, we've had this big altcoin sell-off. We have things that are down 50-60% from their highs in early February now. And it does look like the altcoin markets are bottoming around here, which is interesting as well. You know, we'll see what the month of March brings. You know, hopefully it's not a beware the Ides of March situation. You know, I think that everything could end up pretty good from this point. Sika Bielat, yeah, I'm messy, I'm here. So we're going to talk about really quick, you know, because I'm sure you guys have seen me on Twitter. You know, I've gotten involved with the governance and lobbying processes on Bancor. You know, I wanted to talk briefly about my experiences, really for the first time, heavily participating in a DAO. You know, what some of the challenges are with some of these things. And also, you know, I'd like to encourage you guys as bag holders, you know, we're all professional bag holders here, to get involved in these DAOs, you know, like get on these governance forums, create accounts. You can't just sit around and expect these developers to make you rich. And, you know, and granted that it sometimes happens like that, but if there is a way that you can be a value add to these things that you're invested in, I think you should stick your neck out, and I think you should try to be a value add, and you should try to get the discussion going. From my experience, with Bancor, a large part of being a voice in a DAO is essentially lobbying. These ideas, these proposals for any project that's DAO based are kind of like bills that pass in Congress. You've got to put forth the bill. The bill entails what exactly you're talking about, reasons that you think it should pass, and then you have to get out there and you have to make your voice heard, and you have to talk about this, and you have to convince other people that your idea is worth their vote. Now, one thing that I am learning is that in these situations, it's impossible to have everybody support you. It's impossible for everybody to agree with you. But it's not impossible, if you have a good idea, to have a majority come out and say that they support something that you're doing. Just a little food for thought, if you guys are in some of the things I'm in, whether that be MTA, Bancor, YFI as governance, Synthetics as governance. Don't just sit around with your thumb in your butt. Why don't you get out there and try to get involved and, try to make some proposals and try to get some discussions going. Try to be a value add to your investment. Now I am just kind of in things right now, and I'm waiting on those things to play out. I don't need many X's from here. I think that what my portfolio is right now can get me those X's. So it's just kind of low stress mode, waiting. Now waiting can suck ass. I'm in agony waiting right now, because I see the future. I've got a thesis, I've got a vision, I've acted with conviction on that future, and it sucks right now, to see other things that are dipped that I want to buy. It sucks right now, seeing in a lot of cases, some of these things are just stagnant at lows. It's hard, it can be really, really difficult to sit on your hands. What I've done to help myself sit on my hands a bit is to get involved in these governance processes. I picked up Call of Duty, Cold War, Black Ops last week, so I've been getting a little action on that, just to keep my mind off of everything. But guys, probably everybody here is drawn down to some extent, and I just wanted to talk about the fact that that's stressful, but the reality is, when you look at your portfolio, if you have moved from these high risk to low risk situations and you've done a bit of rotation and you played your cards right, for most people watching this, if you actually look at your balance right now, even though it might not be your all-time high, I've got a feeling that a month and a half ago, you would have only dreamed of this balance. I know I would have. So, I know other people are feeling the same way. But right now, it's truly a waiting game. Is March going to be a huge month for these altcoins that we're in, or is it not? And that's something that the time will tell. But in the meantime, I would advise you to not try to chase anything. It is a good time to reassess what you're in right now before things start to move. It's a good time to look at what you're in and to assess, is this my dream team portfolio? We've already seen a lot of development progress. We've already seen a lot of projects show their true colors so far this year. So, it's a good time to say, hey, I'm in this dog shit over here that I'm really not feeling. I think I'm going to move over to this. These guys have been kicking ass. The community's growing. These guys have been really strong. But anyway, guys, the thing here is find something to fucking do, or you're just going to lose your damn mind. I'm losing my fucking mind, and I have been finding things to do. It sucks after you've gotten all of that dopamine, which most of us got in January. It sucks when you have all that dopamine, and now we're just at a period of dopamine deprivation. We're almost in rehab in a sense. Our dopamine levels are normalizing, our receptors are not getting that dopamine overload that they've been getting, and most people are going to lose their fucking minds here waiting. You know, I mean, what if a lot of other altcoins start pumping in March and yours is one of the ones that doesn't bump until April? You know, like, there's going to be people here that sell great positions and, you know, great entries to chase things in March. And, you know, when they sell those things in March, they could be selling bottom. So we'll see. It's definitely a dopamine detox right now. That's a good way to put it. But anyway, I'm not quite sure what we're going to talk about today. You know, I don't really have anything planned. I will talk briefly, and this is just because I haven't gotten a lot of opportunity to discuss Bancor at length. So I do think I'll talk briefly about Bancor here to start things off, and some of the advantages that Bancor has, and also you know, I want to discuss some of the things that Bancor does that no one else does. So what exactly is the BNT token? Well, it's a unit of liquidity for one. You know, BNT is the connector. BNT is the routes for everything on the Bancor protocol. Everything is paired versus BNT. One of the really interesting things about Bancor is, you know, Bancor gets a lot of volume from aggregators like 1inch and Matcha. And 1inch and Matcha, a lot of this routing is based on liquidity. So one of the really interesting things about the Bancor platform is that as the price of BNT increases, the liquidity on the platform increases in line with that price increase. So right now we've got Bancor around $5. We've got around $900 million worth of liquidity on the Bancor platform. If we increase the price of Bancor to $10, let's say, then we're going to be looking at over $1.8 billion of liquidity in the Bancor platform. Now, because liquidity scales with the price of BNT like that, as liquidity scales, as the price of BNT goes up, everything on this platform becomes more liquid because it's paired versus BNT, right? And as things become more liquid, it's almost a feedback loop to where we get even more volume to the Bancor platform, which makes it more attractive for LPs to come in and add more liquidity, which begets more volume. So we're right here, at a moment with Bancor where the snowball has kind of been kicked down the hill. So the big question becomes, well, why would I provide liquidity at Bancor versus Uniswap? Because right now Uniswap does have, more volume than Bancor or Sushi Swap. Maybe I can provide it Sushi Swap, and as an LP, I can get better fees from these pools. So why would I actually provide liquidity at Bancor versus some of these other places? Well, the answer to that question is pretty simple. Impermanent losses become one of the most highly discussed, scariest things about liquidity provision. And it's something that very few people actually understand. But basically, when I provide liquidity on Uniswap, let's say I'm providing liquidity for the Uni token versus Ethereum. Well, I'm not just exposed to the Uni token. I'm exposed to Ethereum as well. And Uniswap and Ethereum do this. Now let's say, Ethereum significantly underperforms Uni, or Uni significantly outperforms Ethereum. Well, I would actually outperform that LP position just through spot buy and hold Uni instead of being exposed to both, because these pools and these AMMs are 50-50 balance. If Uni goes 5x, right, versus the Ethereum, what's going to actually happen is we're going to maintain that 50-50 balance, and after that 5x, a lot of my money is going to be shifted over to the Ethereum side of things to maintain that 50-50 ratio on the pools, and I will have ended up underperforming just buy and hold. Well, that's kind of a problem, especially in a bull market, to where these impermanent loss risks are so present. We want to extract every ounce of profit from these markets that's possible. So what Bancor actually allows you to do is to be a liquidity provider with exposure to a single side, which is unique because now I can come in, I can have Uni, I can be a Uni bull, I can deposit my Uni onto Bancor, I can collect fees from swaps, right? And after 100 days, I'm fully insured against any kind of impermanent loss. So even if Uni 5x's, 10x's, not only do I get to collect those pool fees, not only do I get to collect those liquidity mining rewards for Bancor, by being a liquidity provider on their platform, but I'm also not exposed to impermanent loss. Well, how is Bancor able to do this, right? Bancor does something unique called co-investment. And co-investment creates a unique opportunity for Bancor. So a good example of this is the Rook token, which you guys have seen has blown up to over $20 million of liquidity on Bancor in about a week's time. Quite impressive. So what actually happens is Bancor has a co-investment limit for these whitelisted liquidity pools. What whitelisting means is that that pool itself is insured against impermanent loss. Okay? Now you vest this impermanent loss insurance over a period of 100 days. So the idea here is that if you're a sticky liquidity, if you come in and you commit to being a liquidity provider on the platform for a 100-day period of time, then they got your back. But here's the thing. How can one just come in and deposit, let's say $5 million worth of Rook onto the platform? Who's going to be the other side of that? Well, this is where the Bancor platform kicks in. Bancor will actually mint fresh Bancor up to a certain level to pair with your Rook liquidity. Now, here's the thing. If Bancor is $5 million of that liquidity in the Rook pool, the platform itself is actually collecting fees, pool fees, on that $5 million, on whatever kind of Bancor they've got co-invested alongside somebody's single-sided liquidity deposit. And these fees from co-investment are actually revenue from the platform, and these fees are used to insure these single-sided liquidity providers against impermanent loss. So one of the interesting things about Bancor is that it's not just a platform to where some smart people have come together and written some code and done a little bit of modeling. They've actually got a team of economists that have come in and modeled out all of these things that they're doing, modeled out the edge cases, and made sure that the platform, if this happens, if that happens, et cetera, is actually going to be able to bear the risk of providing this impermanent loss insurance. And the answer is yes. Even in brutal bear markets, even in extreme edge cases, it seems that the fees that the platform is able to generate from these co-investments are, in fact, enough to protect people against impermanent loss. Now, this is huge because impermanent loss is the biggest issue for any liquidity provider. Impermanent loss can be quite extreme if you don't know what you're doing, and you can actually lose a lot of money to impermanent loss. So seeing somebody be able to come in and address the issue of impermanent loss and also give people the ability to maintain single-sided asset exposure, but also be a liquidity provider, that's no small feat. I think that it's probably the biggest revolution in liquidity providing that DeFi has managed to create, which is really interesting. So, Death Intico has a question, and he says, when you deposit coins on a platform to stake or LP, what happens if that site goes offline? Do the coins return to your wallet, or are you dependent on them? If the latter, I don't see how this is DeFi. Well, things like Uniswap, like Bancor, are just a front-end interface to a back-end infrastructure, and this back-end infrastructure is hosted on Ethereum, okay? So even if, let's say Uniswap went offline, you could still get in there and interact with these smart contracts for Ethereum, and you could withdraw your liquidity. Bancor is the same way, where, I can get in there, I can interact directly with these smart contracts, I can pull my liquidity out. And that's why, people say, what if the government shuts down Uniswap? Well, they can't. They can shut down the front end, but a new front end can pop up just like that. The code's open source. Somebody somewhere can deploy a new front end and we're back to business just like that. Super fast. So these dApps, in a sense, are truly unstoppable. Now, one of the really interesting things that's happened recently, and I'm sure you guys have seen the racist bullshit that's been deployed on Binance Smart Chain. It's really sad to see, this community is full of autists, so, I don't know why we expect it any different. But you've got several examples of just horrible things, that are being deployed on Binance Smart Chain. We don't know if it's just trolls, Ethereum maximalists, a combination of the two. But one of the biggest issues people have with Binance Smart Chain is, unlike Ethereum, to where we are looking at a true decentralization, which brings the properties of, immutability basically to the blockchain. And of course, there's arguments against this too, like after the DAO hack, right? Ethereum famously forked to recover those funds. But Ethereum now is kind of at a point where we're decentralized to a level to where it is safe to deploy these dApps there, and you can essentially call these dApps unstoppable. So people are trying to deploy racist shit to Binance Smart Chain to prove that Binance Smart Chain is centralized and therefore has no value. It's basically just an EVM compatible casino that Binance has deployed. At the end of the day, that's what a lot of degens want. They want a cheap, fast place to degen. And Binance Smart Chain fills that niche wonderfully. It's the Ethereum experience we should be having, right? If anybody that's used Binance Smart Chain knows what I'm talking about, you get on it and it's awesome. It's fast, it's cheap, trading is just like that. I can enter and exit a farm super fast. If I'm farming, I can actually compound my gains super fast. Everything just seems to work. And that's fantastic, and for now and for the foreseeable future, that's fantastic. But the real argument, over Binance Smart Chain is the long-term viability of Binance Smart Chain. And the fact that some people are worrying about censorship on Binance Smart Chain is something that brings the long-term viability of this platform into question. It's something to think about. Right now, should you be on Binance Smart Chain, absolutely milking it dry, taking advantage of it? Yes. But a lot of these DeFi maximalists, are pissed off about this shit because it's difficult to consider any project on Binance Smart Chain. It's something that's long-term investable. Now, even on Ethereum, we're talking shitcoins, right? We're talking shitcoins. Even the best projects, even Aave, we're talking shitcoins. And now we've kind of gotten to a period where, are we in a new paradigm or are we not? I've heard this shit 100 times. Back in the ICO era, even before that, we're gonna change the game here. We're gonna do things differently. Interestingly enough, for the first time ever, we actually have like massive amounts of code being shipped. We've got DAOs that are in operation, that are carrying out the will of these token holders. You've got actual protocols, dApps, that have users that do significant amounts of transactional volume. So the question then becomes, is it different this time? For the first time ever, are shitcoins investable? Are we going to see shitcoins emerge from this cycle that end up growing huge over time, as protocols? And that's something that I struggle with because I've never seen that happen before. And I'm skeptical to think that it could happen now. But there are those that believe that we're on the cusp of this new revolution, right? That I can come in now and I can invest in DeFi early. We're early now. Gas is still a problem. This isn't mainstream. I can come in, I can invest in DeFi early, and I can take advantage of this, and I can have a long-term investment, and I can earn protocol fees in the meantime and participate in governance. Even if there are things that end up being great investments over the longer period of time, I want to stress here that it's important not to get too caught up in this narrative. And the main reason is because even the best things in crypto are prone to extreme price fluctuations. What I can see now is a DeFi bubble forming. And from the ashes of this massive DeFi bubble, who knows when it's going to end? 6 months, a year, next month? I don't fucking know. From the ashes of this DeFi bubble, though, maybe some really, really interesting, attractive things emerge that have long-term viability. Like Aave is a front runner for that, synthetics. But even then, it wouldn't surprise me to see Aave go negative 80%, you know, at the end of this bubble, or synthetics, or really anything in this space. Which brings me to the point I'm trying to make, and that's there's only the pump. You can be a community member during a bull market. You know, somebody said yesterday on Twitter, you've always said don't be a community member, you know, yet I see you doing community member things. For example, with Bancor. Well, I typically am a community member. You know, I try to be a value add to the things I buy. I try to be a value add to the things I invest in because I'm in a unique position to do that. You know, whether that be through providing insight based on my experience in crypto, whether that be through me using my audience to increase exposure. I'm in a position to be a value add to the things that I buy. And so I capitalize on that position. You know, I try to be a value add, you know, rather than to be a mooch, rather than to be a leech. But the thing is you don't want to be a forever community member. You don't want to be a community member when the fat lady stops singing, when the music stops. You don't want to be a community member because a community member is, you know, you're going to be a bag holder. And while I love Bancor right now, you know, the reality is that we should all keep in mind why we're here, and that's to get these multiples. I love Bancor because I think Bancor's got a lot of opportunity to grow, and Bancor has more Lindy than a lot of these existing DeFi protocols. This shit's been around for years and years and years. But at the end of the day, you know, I'm in Bancor to see Bancor pump to $20+. You know, I'm not in Bancor to think it's the future of finance and fucking, you know, be here for 20 years holding this shit. Like, it's not like that. So the real question, you know, nobody knows when this shit's gonna be over. Nobody knows when this cycle's gonna be over. You pretty much just have to ride the bull and you have to continue to shift from higher risk to lower risk. And at a certain point, the music's gonna stop. There are gonna be those among us that say enough is enough at some point during this cycle, and they de-risk the stable coins and they collect that sweet 20%, 30% APY from a relatively low risk point of view. And there's going to be those of us that, you know, it's never enough. We've always got to chase that next multiple. You know, you manage to grow your $50,000 portfolio to 200. You know, just another 5x and I'll be a millionaire. You know, you think a million's enough, but once you're a millionaire, you start thinking, well, a million's, that's not actually enough to do what I want to set out here. You know, get one more 5x and I'll have 5 million. Then I can really do something with that. Beware of that mindset. You know what's enough. Know what doesn't make sense and what does. It's one of the most difficult things about crypto because a lot of times the things that you wouldn't think make sense do. I can't imagine any other market where you look at something and say, oh yeah, you know, a 3x on this should be easy from here. It's kind of a crypto thing. So just keep that in mind. At the end of the day, there's only the pump, okay? But in the meantime, can you be a good community member? Can you be a value add to the things you're buying? Can you grow the community? You know, it can be as simple as you being present in that community's communication channels. You know, you engaging in conversation with people there. You know, you connecting with people there. You don't have to make governance proposals and do this and that. But you can do things that are a value add. And, you know, I would encourage everybody here to play around with that a little bit. if not just to increase the value of the things you're holding, but also for your own sanity. I mean, what the fuck else are you doing right here? You're just bag holding and waiting. You know, wouldn't you feel better if you're doing something to increase your chance of success here? Yeah, educating people goes a long way. You know, if you're entrenched in something, you've been there for 2 months, you know how everything works, you know the rules around here, you know the best ways to take advantage of different things this protocol is offering. You know, as new people come in, hold their hand. You know, help onboard them to the protocol. Help them to learn. And you know, they can become educators too. Education's super important. You know, in DeFi, a lot of people don't understand how this shit works. So, you gotta be an educator here. Okay. So let's look at some charts, right? Let's have a look at some charts. I do have some new tools that I'm using now. Oh. There we go. All right, let me get this. Got a background removal. There we go. And I'm gonna move over my YouTube window so I can see all of the chat here. What percent of my portfolio is in Bitcoin and Ethereum? Right now, like pretty much 0%. I've used SCMR for a long time. I am using in Silico's crayons now, playing around with them, seeing how I like them. Crayons is a trend-based indicator like SCMR. You guys have seen some other big names using these indicators like Flood, BitMEX Flood. Really interesting oscillator down here as well. That seems to be, you know, doing a really nice job of marking potential bottoms and stuff. You know, you can also use this oscillator for, you know, potential bullish divergences like what we have right here. Pretty clear bull div right there. You know, what we're actually looking at here is Rook versus Ethereum. And we're looking at the volume weighted average price of Rook versus Ethereum. We can see that this VWAP right here acted as resistance for the longest period of time. You know, our initial run up on Rook, of course, was us being able to get above this volume weighted average price. And now, you know, we saw, or we're in a position to where, you know, Rook, like everything else, you know, retraced pretty significantly. Here's about a 50% retracement versus Ethereum. It's not too brutal when you consider that this is pretty normal for Rook. You know, Rook's kind of an asshole. I mean, how many fucking times are we gonna see this, right? 40%, 40%, 44%, 52%. You know, I doubt it would be the last significant pullback for Rook. You know, we have managed to, at what should theoretically be a support level, we have managed to triple Rook's liquidity, you know, which I think is definitely bullish for Rook. It makes Rook more attractive for whales. You know, whales can come in now and enter and exit Rook with ease. But one of the most important things that increasing liquidity on Rook has done is it's actually scaled the hiding game. People, you know, whales are now able to come in and able to take advantage of the hiding game on Rook. And they're able to do so at a larger scale because hopefully, you know, all of this new liquidity should curtail some of this just absolutely wild volatility on Rook. But also this newfound liquidity for Rook makes it so that people can play the hiding game and they can, you know, acquire Rook at potentially below market prices and arbitrage it at market prices, and they can fill up the Rook treasury without tanking the Rook price. You know, hiding game's free money, and with this higher level of liquidity, now, you know, we can scale the hiding game to where the treasury is seeing maybe $1 million inflows per day, and people are able to capture that market premium. So it'll be interesting to see the longer term impacts of that. Let's have a look at Rook perp. You know, this is a way for us to actually chart the volume here. Or you know what? Rather than look at Rook perp, so I can do this times There we go. And, you know, what we're looking at here now, is the daily chart of Rook versus USDT. You know, we've got a little bounce here. There definitely is some support here in this region. You know, trends on this has not gone green yet. So versus the dollar, you know, Rook still, it might be reversing here. You know, it shows that it might still be in a bit of a downtrend as well. Because Rook is on such strong support versus Ethereum, I do think that a lot of the USD fate of Rook, at least in the near term, does lie in the hands of Ethereum. You know, if Ethereum were to tank here, if Ethereum were to go up, you know, Rook would certainly capture that price action. Let's see if there's any kind of GAN fanning or anything, you know, we can do on Rook that looks pretty good. Probably do a bottom to top. Not a huge fan of that, to be honest. And let's see here. So peak to valley, about 60% retracement. I'm of the mind that, you know, Rook still has plenty of room to run. I think it's a future blue chip on DeFi. You know, for anybody looking to enter Rook, there's definitely support around here. So I think this is probably a good time to scale in. If you're super lucky, you know, maybe you get Rook somewhere in the $260 range. And that's if we leg down here somehow and, you know, we test this VWAP. But once again, you know, a lot of that's going to be dependent on Ethereum. You know, is Ethereum going to go bearish again? And you know, are we going to manage to dump this? A lot of questions there. So let's go ahead and have a look at Bancor as well. You know, I've got this same in silico indicator suite up. I've also got the volume weighted average price on Bancor. And here we are looking at Bancor versus Bitcoin, which is a really interesting chart. You know, if we actually zoom out and we look at this on the weekly time frame, I don't know how this got all contorted like that. But we actually look at this in the weekly time frame, you know, we can see just where Bancor is. I'll just go ahead and blow these away. We're going to go to a line chart here. We're going to draw it from this second peak. So you can actually just see, you know, how close this is to having some kind of breakout versus Bitcoin. You know, which at the end of the day is what we're looking at for any kind of alt season, right? You know, we want to see something outperform Bitcoin. Also, we want to see something outperform Ethereum. Let's go ahead and have a look at BNT versus Ethereum. And interestingly enough, you know, once again, we're seeing this VWAP here, which acted as resistance. It acted as resistance again. It acted as support for this complacency bounce. And now it's once again acting as resistance. So, you know, with Bancor is definitely a really good example of something with bullish momentum right now. You know, we're here at the cusp of all of these resistances versus all of these other things. And we're really just waiting on Bancor to break out, you know, for the Bancor Ethereum to get above this volume weighted average price, perhaps, you know, which could signal some more upside for Bancor versus Bitcoin to break out. So looking at the Tether chart, you know, see Tether versus the dollar, you know, this kind of tells a bit of a different story. You know, one might look at this and they might say, you know, wow, you know, what a run. We've already gone from 50 cents to, you know, at the peak, $6.50. You know, that looks quite good. But you have to remember as well that, you know, the value of Bancor right here versus the value of Bancor right here are two different stories. You know, down here, I don't think Bancor had 100 million in TVL, you know, and now we're looking at close to $1 billion in TVL. I think it actually had less than 100 million in TVL. Significantly less revenue generation, et cetera, et cetera. So there definitely could be room to run here for BNT. You know, we are waiting on some kind of bullish reversal. There's not really any support here per se, you know, versus the dollar until maybe $3.60, I'd say. So it's something interesting to keep an eye on. You know, once again, this is super bullish versus Bitcoin. It's super bullish versus Ethereum. So in order for Bancor to really pull back and test some of these lower levels, it would be interesting to see. It would be interesting to see, you know, how it held up. You know, if Bitcoin were to tank, if Ethereum were to tank, you know, those would be the kinds of things that I think could pull us down here. Now, something else that I wanted to point out, which is really interesting on Bancor, I don't think that they become public on this yet, but you know, their on-chain activity is certainly public. Is DeFi Maximalist.Ethereum. Got a $200 million DeFi well here with an $11.5 million Bancor position. This is Defiance Capital, which is one of the most successful, one of the best DeFi firms out there. And you look at the history, right? And this is today. This is March 1st, right? So, you know, you got people out there waiting to buy the Bancor dip, you know, if something were to come. And then you've got guys like this, to where you're seeing, here's an $800,000 purchase of BNT at $5 BNT. Here's a $500,000 purchase at $5 BNT. Here's a $700,000 purchase at $5 BNT. And once again yesterday, 800. They're buying all this shit at $5. So it does kind of, in my opinion, beg the question. Also big MTA guys, which is nice to see. Absolute buttfuck load of MTA here. I don't know why they're not staking it. It kind of seems silly to have 700,000 MTA just totally naked, you know. But you've got some of the best investors in DeFi period that are making a really, really large bet on Bancor here. You can see them staking this BNT over here. This is, you know, when you do invest, you know, you can identify these whales and, you know, you can figure out, you know, like, are people accumulating? You know, what's going on there? Let's have a look at Nansen for Bancor, just to see if there's any, like, kind of discernible information there. You know, we might be able to identify other large parties, you know, other than Defiance, that are very publicly accumulating Bancor at these levels. Oh my god, this song is driving me crazy. What the fuck is this? Okay. Yeah, next. Okay. So let's check out BNT here. A lot of these BNT, you know, whales are going to be staking, of course, so that always does complicate things just a bit. Any day now. Okay. So you can see, you know, a lot more BNT is actually on exchange as liquidity in Bancor. You know, we're seeing that uptick right here. I'm mainly interested in, let's see, balance changes. So we've got outflows of BNT from Coinbase, which is really interesting. We also have outflows of BNT from Binance, which is really interesting. And this is in the last 7 days. So here's another 3 million. That's $15 million of BNT that were accumulated. Super interesting to see. Top transactions here. DeFi Maximalist.eth. This is quite interesting. I do think Three Arrows is one of the big investors in Defiance. So it does seem that Three Arrows has taken interest in Bancor, you know, as as a proxy through them. Let's look at this transaction. So they sent, Hxro sent $7 million of Bancor to DeFi maximalists. And it looks like that they were actually accumulating this BNT on Binance. You can see it right here. Bitfinex, Binance, and other sources as well. So it does look like, you know, Hxro did the off-chain accumulation, and it looks like Defiance has been doing the on-chain accumulation, and they're consolidating all of these funds under control of Defiance, which is something that's really interesting. So my BNT entry, I bought a lot of my BNT around $3.50, and I bought another large amount of BNT around $5. Let's take a look at Rook just while we're here. We do need to have, you know, Bancor added as a top exchange here. You know, interestingly enough, there's actually 24,000 Rook on Bancor now. So Bancor has a lot more liquidity than Uniswap. Some notable wallets and transactions. You know, a lot of these guys are actually transferring into the Rook pool on Bancor. When we actually look at the rich list now, the activity that we're actually seeing, you know, the people that aren't staking on Bancor is, you know, it appears to be the people we're adding. You know, you've got this CRV.ETH, you know, which is added about 800 Rook to their position in the last 7 days. Whoever this guy is added about 1,400 Rook to his position in the last 7 days. So once again, you know, you're seeing high conviction here. You're seeing people adding to their positions. You know, seeing the dip is really a buying opportunity rather than a reason to sell, which is good to see. I do want to check this wallet out here. You know, this is a guy that has accumulated Rook recently. It looks like he's accumulating this Rook on Uniswap, which is interesting. But this is just a wallet with only Rook in it. You know, it's also got quite a bit of KDAI, which means this guy is not only a liquidity provider for Keeper DAO, but he's also accumulating Rook token on his own. Interesting to see. Okay, so let's move on to MPH. MPH has actually just released zero coupon bonds. Zero coupon bonds are really interesting, you know, because it actually gives the opportunity now to build structured products on top of 88 MPH. So, what are structured products? I'm just gonna go Investopedia. I think they probably can explain this pretty well. So, structured products offer retail investors easy access to derivatives. They are pre-packaged investments that normally include assets linked to interest plus one or more derivatives. They take traditional securities such as investment-grade bonds and replace the usual payment features with non-traditional payoffs. They can be principal guaranteed and issue returns on the maturity date. So really interesting stuff. A zero coupon bond and a call option on an underlying equity instrument such as a common stock. You know, MPH has talked about partnering with Hedgic, and a structured product could be a zero coupon bond issued by MPH, you know, alongside a call option from Hedgic. Just something really interesting to see there. So chart-wise, interestingly enough, MPH has just kind of been a bastard. kind of like everything else, you know, we had this amazing run up, you know, what a window of dopamine from the 12th of January to the 19th of January. You know, this dopamine really happened over a 1 week period of time. We went sideways after that. We marked down, you know, we could be reaccumulating here. One of the interesting things about MPH is that CMS Holdings, which is one of the bigger firms in DeFi, or in DeFi, DeFi. One of the more respected firms in DeFi has actually announced involvement in helping to grow the MPH protocol. So super interesting. You know, I'm still holding on to the vast majority of my MPH. I've only taken 20% profit on this. Just in terms of something that has a lot of room to run, that is building, that's doing something different, working on something new. MPH definitely still fits that bill. And we're finally seeing, you know, a little bit of accumulation here on the USD side. Now this is a log chart, so it's not going to look like it's down too much. But actually from highs to where we are right now, like many things, this is down 56%. So that could be seen as a quality entry to this project, especially considering that they are consulting with CMS, who's obviously taken interest and invested in this protocol. So somebody said, hey, is the downside to staking Rook, or is there downside to staking Rook other than having to hold for 100 days if we moon? No. I mean, really here you are accepting protocol risks. Smart contract risks, basically, you know, if Bancor was to get hacked or something. I will say, you know, Bancor is probably one of the lower risk places for a hack, just because they do employ top tier programmers, guys that have been doing, you know, Solidity based coding longer than anybody else. They've been thoroughly audited, you know, several audits. Anything's got a risk, but Bancor would be on the lower side of that risk. So 88 MPH from a token economic standpoint is super interesting because 100% of protocol fees are actually accrued to MPH stakers. And by staking MPH, as the protocol grows, you literally get paid in DAI. So it's a source of income. You know, this is a DeFi primitive, you know, and that structured products can be built on top of it. And the idea here is that MPH is a base layer for all sorts of different other things to be built on top of it. So if this base layer is solid, if it opens the doors to these possibilities, other people are going to come, they're going to build all sorts of stuff on top of MPH, and MPH benefits directly from everything built on it. And holding MPH, you'll benefit from all that as well, because increased fees generated by the platform, of course, is going to result in higher percent APR for you staking your MPH. Now, back to Bancor. Here's the thing. Your impermanent loss protection that gives you this pure single-sided exposure vests over a 100-day period of time. Now, I can pull out at any time, and I can just accept the impermanent loss. You know, maybe it won't be too great. DeFi assets do have a high degree of correlation. So, you know, you can expect that if we were in an environment to where Rook did go 5 or 10x, that we would probably see some solid appreciation on the Bancor token as well. So hopefully you would avoid impermanent loss, you know, because the two things, you know, do have a high degree of correlation. But if you do decide to unstake out before the 30-day window, you are going to have some impermanent loss there. Impermanent loss might not be even that bad, you know, and maybe through the protocol fees and through the APR you've managed to earn, you know, just by having those liquidity mining rewards that are available, maybe that's enough to offset it. After 30 days, you get 30% impermanent loss protection that kicks in right then and there. And then every day after that, you vest another 1% impermanent loss protection. So if you actually go look at the BNT protection dashboard, I think it does a good job of showing you, you know, if you were 100% protected, how much you could withdraw versus the amount you can withdraw right now. And that's going to allow you to make that decision of, hey, fuck, you know, this just 10x, so I go ahead and pull out and eat that impermanent loss, or do I leave it in, or, you know, what the fuck do I do right now? You'll at least be able to get in there, see what's up, make that decision. So MPH, let's look at MPH versus Ethereum. So here we are, MPH versus Ethereum. And we discussed this in a previous stream. It does look like this is the level that we were looking at, you know, just in terms of a support resistance flip. You know, we can also come in and we can draw this level too. So you consider MPH, it's really something that's range bound at this moment in time versus Ethereum, you know, and to get really bullish on MTH, you know, for us to start seeing some really, really nice US dollar appreciation, we are going to have to conquer this level versus Ethereum, you know, which is something I believe can be done. Trend line wise, you know, here's the trend line. You know, maybe MPH really doesn't take off until April, you know, when we see some structured products and things built on it in the meantime. But in the meantime, you can be a good community member. You can help to educate other people on MPH. You can learn about structured products. You can provide liquidity. You can, you know, raise awareness. Most importantly, you can stake your MPH, and, you know, that's a whole month of protocol fees you can actually collect in the meantime. So just a couple of important points. You know, one, we need to get above this. Here's our horizontal resistance here. It was support for almost an entire month. You know, we broke that support level down and bounced off the support level below it. We've gotten rejected here. But at what point is MPH able to actually get above this line and this line here? That's what I'm paying attention to, and that's what I've got my eyes on. Okay. So let's take a look at Badger. You know, we didn't chart Badger on the previous stream, you know, and some people wanted to get Badger charted. You know, we are once again looking at a logarithmic chart, so it may not seem that Badger retraced as significantly as it did, but, you know, if we use this retracement tool, you know, we see the Badger versus the dollar, like so many other things in DeFi, retraced about 60%. It doesn't really matter what you're in. You know, we're seeing a 60% retracement here. So if you're looking at your portfolio right now and you aren't drawn down 50, 60%, then I'd say you're outperforming the market. You know, good on you, good job. But once again, you know, we're seeing a 50% pullback. And interestingly enough, you know, we can draw targets based on these pullbacks a couple of different ways. One of the more interesting ways that I begin to investigate, you know, I haven't really subscribed to it yet. I haven't seen enough evidence, enough examples. If you guys are familiar with these Hxro streams, you know Random Task. And Random Task has something that he's been using to calculate these price discovery targets that seems to be doing a really nice job. And he calls it Chaos PRZ or something like that. So I'm going to go ahead and I'm going to convert these chaos levels to red. And what you actually do is you add this 4.667 and this 8.77 fib. And then when you do have a significant retracement like this, I'm able to capture this retracement and then map out future targets for this asset based on how hard it pulled back. So it's a totally new way for us to, you know, maybe look for some confluence, you know, if you're already using GAN fans and stuff like that. But using Random Task method and this KSPRZ, you know, that puts take profit 1 for this at $300 and take profit 2 for just over $500. Now let's go ahead and shift this to a lower time frame. Let's draw a GAN fan on this. This is logarithmic. You know, we draw GAN fans on the linear time frame. And you can see that Badger has respected this GAN fan extremely well. You know, you can see this 1 out of 1 line up here when the fan is drawn this way. And just to show you guys the anchor points. You know, we took the 28th of December, which was the bottom, and we anchored here. And then we anchored at this local top at the wick. on the 31st of December. And you can see that this GAN fan is actually a really nice fit here. Now, once we got over this level, we tested a support. We came up to the next level. You know, you can see Badger tried to bounce here, you know, ended up breaking down. And, you know, we're doing a bit of accumulation here is what it looks like. So time frames. You know, when would it actually make sense for Badger to maybe hit this $300 target? Well, now we're going to look at points of intersection here. So the first opportunity, the first point of intersection that we have for this $300 target is right here. And that would be the end of March. I think that that'd be quite aggressive. So I'm not quite sure if that's reasonable, if that's pure hopium or what. The second opportunity we have for us to encounter this 1 out of 1 line again, and this chaos PRZ target would be right here towards the end of June, which would be interesting to see, you know, if we manage to have you know, some kind of all season until June. And look, it's not just going to be like that, you know. There's going to be bumps in the road along the way. So maybe Badger does something like this and then manages to get up here, you know. Maybe it goes ahead and does this, pulls back, and then does something like this. At the end of the day, it doesn't really matter how it gets there as long as it gets there. But you have to be able to map out these future points to where it's a little outrageous, but you go ahead and, you know, you've got a plan in place to where, you know, hey, this is going to hit this level and, you know, I'm going to get in there and I'm going to take profits, right? I'm going to take advantage of that. I do really like Badger, just in the sense that it's fitting this GAN fan really well, you know, which does kind of give me a blueprint to follow here. And Badger has just done incredibly well. I think the TVL has continued to increase. They continue to build. They continue to keep their heads down. So when could we really see Badger, you know, start to accelerate again and start to have some fun? And I think, you know, we can look at this diagonal right here. And interestingly enough, if we maintain this level right here from a horizontal perspective, right, we would break out sometime around a bit over a week from now. It looks like the 10th, 11th of March. And interestingly enough, okay, this is around when all of the altcoin pumps really started kicking it into high gear in 2017. So it is really interesting to see that confluence here. Once again, similar time frame. In 2017, we topped out early February. We bottomed around the 22nd, 23rd of February. And then things really started popping off the 11th or 12th of March. Now, straight GAN target, you know, if we really run here and we pop off, I think, you know, 150 to 170 bucks sounds pretty good, you know, just for a target by the end of March. And that's if things really get aggressive here and, you know, March really is a good month. And who knows really what happens after that. It's just kind of a matter of playing it by ear. You know, who knows how fast the third wave will happen. But once again, another thing to be on the lookout for is this third wave to the upside. Here's wave 1. Here's a potential wave 2. On the third push for really anything, you know, you should really strongly be considering taking profits. It doesn't really matter what you look at. Most things will do a solid 3 pushes. That's to the upside or the downside. So Badger, I think Badger is probably a fantastic entry here. You know, it's not like they've gone anywhere. They're working on different methods of value accrual to the Badger token. You know, I think Badger over $100 is really a shoe-in at some point. You know, the real question here is, how long does that take? So all eyes on this diagonal. You know, keep your eyes on this diagonal, okay? You can draw this fan. I showed you exactly how to anchor it, where to anchor it, and that fan is going to give you some cheat codes. It's going to give you a glimpse into, you know, potential points of taking profit in the future. But most importantly, just keep your eyes on this. You know, if we keep going horizontal here and we manage to break this out, you know, I'll feel pretty confident that, I mean, we're just aggressively reaccumulating down in this range. Just something to keep your eyes on. And then two, I want to go ahead and draw. Look, we got these horizontals mapped out for Rook. I want to go ahead and draw a GAN fan on Rook versus Ethereum. Now, I don't like GANs as much on non-US dollar pairings. I find that they work the best with US dollar pairings. But that doesn't mean that they can't work here. Okay. Let's see, you know, we've got a pretty solid fit right here. It's not perfect. The first anchor on this is January the 1st. The second anchor is January the 8th. But we're seeing a GAN fan that is still very much valid. It's very difficult for me to look at this Rook chart versus Ethereum and say that the party's over here. I'd really imagine maybe we see Rook go sideways here for a bit, and then we begin to explore these upper GAN levels. They give us a lot of room for upside. Yeah, we are on regular here. But Rook versus Ethereum, you know, we've got this strong horizontal here, which, you know, is also a VWAP, has acted as support on several different instances. I don't believe this time is any different. So accumulating Rook versus Ethereum anywhere down here, that's just something that makes sense. Let's look at MTA, which has just been AIDS as usual, right? Oh. So let's draw a GAN fan on MTA. It'll let me anchor here appropriately. So you can see that we actually have a relatively good GAN fit for MTA. You know, you can see this 1 out of 1 line continue to kind of act as resistance. And sure, you know, we did manage to get above this 1 out of 1 line, but every single time we got above it, you know, was just a swing failure point. We saw MTA attempt to bounce right here, right? We saw MTA, you know, attempt to bounce. It didn't even attempt to bounce right here. You know, attempted to bounce it here, but now, you know, we're looking at MTA, and for the second time, it's attempting to bounce right here. And we do have some confluence here. You know, there's some kind of level going on right here, and it's not perfect, right? Because you can see that, you know, this actually wicked a little bit below it, but we are at a potential point of reversal for MTA. Diagonal wise, this is just straight down, right? Let's move it to a lower time frame. Oh. So diagonal wise, you know, shift in momentum, what are we looking at? Well, you know, if MTA manages to continue sideways here, once again, you know, we're looking at the 6th, 7th of March as an opportunity for MTA to break this local downtrend. You know, right now we're seeing a lot of alts at their potential bottoms. Oh my God, when's the bounce? When's the bounce, right? They're hanging around these bottoms, and they could, you know, be convincing some people to sell at these bottoms as well, if it ends up being the bottom. I'm really watching MTA, you know, as something that could accumulate right here, break this diagonal, and, you know, hopefully break out and do some things. From a fundamental perspective, MTA is still doing very well. You know, they've got their new AMM out, that investment cap on that new AMM, the TVL cap, has worked really well. It's allowed them to test it. You know, over time, they're going to be able to increase that TVL. There's a buy and make proposal out for MTA now, you know, which is going to be really, really good for the token economics of MTA. But just considering, you know, where MTA could go and what makes sense based on the GAN fan, if we were able to go ahead and test this 1 out of 1 line again, we could, by the end of May, be seeing that $10, $11 MTA again. So I'll draw those back. Now let's go ahead and throw random tasks, chaos, PRZ on this. And this is going to give you some actually pretty significant moon boy targets. We're just going to consider the first one. So how long is this little alt season here going to last? You know, when are we going to hit some of these targets? So the first opportunity for us to hit $16, $17 MTA based on the confluence between the GAN and the PRZ would be sometime in early April. That's a bit of a stretch if you ask me. That would require us to get above this 1 out of 1 line. I think that these trends would really have to accelerate for that to be something that's possible. But I'm also looking at this, and you know, we're saying at the end of July, we have this confluence between this level here, this chaos PRZ, and our 1 out of 1 line for GAN. So it's something to keep in mind. It's something to consider. And I'm really going to put, you know, there is a lot of back testing that needs to be done on this. There is a lot of testing, but it's something that I'm watching because any information I can potentially get on timing, you know, is potentially just as valuable as any kind of information that I can get in terms of where something is going. You know, are you prepared, basically, if I told you right now, and let's say this is the timeline that we're living in, right? Are you prepared right now to say, I have strong enough hands to, you know, hold something until this target, you know, that's 700% upside. Even though this could potentially take 150 days to get there. Do I have the patience to wait out 150 days? Especially when, you know, foreseeably there's going to be little road bumps along the way. You know, who knows what the fuck this does? Who knows how it gets there? Most people don't, and that's why these things are actually able to get up there and, you know, to achieve these levels. Let's look at MTA versus Ethereum, you know, which is just a butt ugly chart. I don't think there's a grosser chart than this in DeFi. You know, we're definitely coming to a point where, you know, we're at a level of support. Let me actually chart this on this, so we can have the added benefit of in silico and these levels that are being calculated for us. So kind of interesting here, you know, potential bull div forming versus Ethereum. We're coming into an area of interest down here to where theoretically, you know, there could be buyers that are stepping in, and, you know, we did see this initial bounce here, looking hopefully for a double bottom here in this level. Really ugly here, you know, MTA went up and just kind of failed miserably, right? And you can see this really clearly here. You know, we consolidated below this level, and instead of breaking up, you know, we fucking broke down, and here we are again, you know, testing these lows. One of the interesting things that this does set up is, you know, we've got a diagonal, you know, that we can look at now for a bit of context. Okay. And what if, God forbid, hopefully not, you know, what if we're looking at something like this? Now, the interesting thing about something like this actually being what happens is it's actually setting MTA up to fulfill this scenario that we just talked about. So MTA versus USD, to where, you know, maybe we don't hit this $17 target, right, until the end of July. So we're looking here at, you know, when this actually is able to break out and, you know, get past this structure on Ethereum. We're looking at really the next big level versus Ethereum as maybe 0.0078, 0.008, somewhere in that region. And that's actually a solid 460%. Just something to think about, you know, and this could be indicative of cycle top, you know, or something like that. But, you know, this is kind of something you're going to have to be strapped in, and you're going to have to play out, you know, you're going to have to watch play out. Looking at this is looking kind of like what's going to happen. You know, we're going to consolidate down here. We're going to build this base, and, you know, then we can explore some upside potential. And, you know, once we get to this level, it'll be one of those situations where you're going to have to reevaluate the state of the market and such like that. For me, I'm looking at, you know, I'd really like a 3 to 4x in my portfolio here before super de-risking, going all into stable coins. So this is exactly okay for me. This gets me to exactly where I want to be, you know, assuming that Ethereum doesn't crash and burn. You know, if I'm able to pull this, you know, really 5.5x here, that gets me to where I want to be, right? So there's something to think about there. You know, in terms of some kind of double bottom or something like that, you know, we do see signs of a potential double bottom here. The real question here is, you know, or let's say this was, you know, a bottom, and we're not looking at the bottom as a horizontal. You know, if it were a diagonal, you know, this would actually give us a breakout somewhere here, maybe somewhere in April. And if you look at 2017, you know, while a lot of things did start moving in March, we did have some latecomers to that movement, and a lot of those latecomers, you know, didn't start really moving until April or May. One of the interesting things about the late movers is their trend acceleration. You know, their upside was very rapid compared to some of the earlier movers because everybody had more money then. Everybody was greedy, everybody was rotating. So there was a lot more buying power there, you know, to actually push these things to the upside. Just food for thought, though. MTA, I, of course, you know, have a large position and am biased. But MTA is doing a lot of things right. I would be absolutely shocked, you know, seeing it, who's invested in MTA, the buy and make proposal, I think meta assets, you know, are going to be big in DeFi, and DeFi meta anything is big. You're seeing now meta aggregators come out, which is the concept of aggregating aggregators. You're seeing meta yield farms, the concept of aggregating yield farms. Meta is just a one-stop shop for DeFi, basically, an all-encompassing DeFi product. So meta assets, I think, fall under that umbrella as well, you know, whereas you've got a situation where how many fucking different forms of the US dollar can there be on Ethereum, right? You know, what if I could de-risk my exposure to Tether, to USDC, to DAI by owning a meta asset that doesn't give me full risk exposure to just one of those things? You know, the same thing applies for WBTC, OBTC, SBTC, RenBTC. There's all of these different forms of Bitcoin. Why do I need to just be exposed to one point of failure, to WBTC, when I can be exposed to a meta asset and reduce my risk profile in this market? To me, that's just kind of a no-brainer. Okay, so we keep seeing people, or I keep seeing people say, you know, let's talk about Hedgic. You know, which I think that, you know, Hedgic has a lot of big releases coming now. So Hedgic is something important to look at, something important to consider. So let's go ahead and draw some shit on Hedgic. So Hedgic versus Ethereum, this is not exactly something, you know, you want to be seeing here. You know, we are seeing on the line chart at least, a breakdown from this channel, potential retest of this channel as well, and then maybe a pursuit of further downside. When we change this to candles, you know, it does alter the perspective a bit. And I also wanted to note that, you know, we see situations here where Hedgic actually breaks outside and below these trend lines often. So it's not like an end of the world situation. The reality is that when something is illiquid, trend lines aren't like an end-all be-all. Trend lines aren't something that are necessarily something to live and die by. Now, if this shit had $30 million worth of liquidity and, you know, we had this kind of situation going on, I'd probably be like, man, holy fuck, like, that doesn't look too great. But for something like Hedgic, it's not too concerning, especially, you know, when you consider that, you know, Hedgic does have really, really strong support here, you know, versus Ethereum for this kind of thing. And Hedgic is actually traded on Binance as well. You see, I've actually gotten this bottom trend line drawn from the wicks here, just to provide the interesting perspective that it's not actually broken down here. We've got this VWAP as well for Binance. You know, if I did want to do body to body on Binance, we would be in that same situation. But you have to remember that a lot of people are looking at this from a wick to wick perspective. And as far as they're concerned, you know, this here is on support. We've got a wick right here, which could indicate a swing failure point and potential for upside. At the end of the day, when I'm looking at something like this, and, you know, you can see this on Token Terminal. We'll look at some token terminals in a bit. Love Token Terminal. If you guys aren't using it, it's totally free right now. Highly recommend having a look at this. But I can look at something like Hedgic. I can look at the, you know, P to S ratio, and I'm looking at about a 10. And when I look at the actual revenue for Hedgic, you know, you can see the revenue for Hedgic is really interesting, and that, you know, it comes in spurts. It's not something that's necessarily very consistent, you know, and we saw this huge inflow of revenue for Hedgic. I think somebody bought a shitload of Ethereum call options February 18th. So I don't think they're going to actually end up making money. You know, I think that's going to be a big win for the liquidity providers on Hedgic. But it is interesting to look at revenue for these projects. And it gives you the ability to compare apples to apples in some of these things. I can compare Uniswap to Bancor, for example, in terms of revenue generation and such, because Uniswap and Bancor are both AMM, so I can compare Uniswap to Sushi. You know, that kind of thing. Uh-oh, lost our music. Yeah, we're still watching. Okay. So just keeping this in mind, you know, we are looking at, and it looks like Hedgic is, of course, is going to be low on the daily profit because they've maxed out the Ethereum side of things in terms of how much options they're able actually to sell. But in the past 30 days, we're looking at something that's done $8 million worth of revenue. And at the end of the day, you get Hedgic with a market cap of, it says $800 million. I would assume this is fully diluted. But it does look like P to S is being calculated off of the fully diluted market cap, which is something that's interesting. So we're looking at Hedgic right here at 234. fully diluted valuation, yeah, 850 million, but the market cap here is just 100 million. Now, Hedgic, there is a bit of inflation going on for the next 3 months, so maybe there's an opportunity cost on that. Did MPH rug? No, fucking kind of question is that? We just looked at MPH. I mean, looks the same as we looked at it, like a couple of days ago, or a couple of minutes ago. Anyway. But it's very difficult for me to imagine, even though, we really don't have many other examples of successful option protocols to where we can compare PS or different things like that. I'm coming and I'm looking at Hedgic. It's very, very difficult for me to see something that's generating this much revenue, with this much potential, and see a chart like this and think that, wow, this chart looks toppy. If anything, it looks very bottomy. This looks like something that has a lot of room for appreciation. Let's go ahead and check out Hedgic versus BUSD. Now, this is something that I really like to see Hedgic reclaim. It is bearish that Hedgic is below this volume weighted average price, because you can see here that Hedgic has respected this VWAP really, really, really well in the past. Down here, while Hedgic was dumping, we tested the VWAP, rejected, and we were really able to start seeing uptrend on Hedgic when Hedgic got above this volume weighted average price, right? So the concerning thing for Hedgic now is that Hedgic is now below the VWAP again. And if we were to test this VWAP and we weren't to, reclaim this VWAP, then and only then would I consider maybe moving to something else, waiting out the inflation, not stomaching that opportunity cost, deploying some of my capital to something that looks better in the near term, and keeping in mind that fundamentally Hedgic does look very strong, and that, potentially for something like Hedgic, I could wait for the chart to start to look better, and I could wait to come in and enter that and then capture that potential upside in the future. Now, despite all of this, Hedgic is very, very bullish from a fundamental perspective. I do think that there were some things that were supposed to be launched for Hedgic at the end of February, and I haven't done a lot of research into it, but it does seem that those things were delayed. One of those things being auto hedging for LPs. Another one of those things being Whiteheart, which is the automatic hedging positions, which is really interesting. I mean, that's a structured product in a sense, because it allows you to, for example, purchase Ethereum and have your downside fully hedged for 15 days. Now, things like Whiteheart are actually going to route all of that volume through Hedgic. So it's just something important to remember. Things like Whiteheart could make Hedgic a lot more attractive from a revenue generation standpoint. It could add more consistency to the revenue generated. And auto hedging of LPs could also increase the liquidity of Hedgic and allow Hedgic to sell larger options. If those LPs were automatically hedged, then those people wouldn't be at risk as much on the impermanent loss front. So just something important to consider. At the beginning of the stream when I talked about now is a good time, even if you feel really, really strongly from a fundamental perspective that something you have is a killer. If there are other opportunities out there to where you feel that same fundamental strength for, right? To where you think that this is a killer investment, look at these charts right now and see which charts are looking the best just from a bullish momentum perspective. Now is a good time before things really start to move, potentially in March, to assess the opportunity cost of holding underperformers, and to go ahead and rotate those funds to things that could be more immediate term performers. Like, for example, Bancor is looking like it has promise as something that could be more immediate term than Hedgic. Once again, I'm not bearish on Hedgic. We do see indications here that are really you know, there could be signs of a bullish reversal. You know, we're seeing the Willy come down into an embedded state, you know, which could signal that a bottom is near. Not only that, but you do have a support resistance flip here as well. And you can see this area for Hedgic has been support time and time again. So even though we are below the VWAP, you know, is this just a bear trap, you know, with all the bullish fundamental things coming for Hedgic? And that's a good question. So I need to do more research, and I need to find out if those fundamental drivers are actually delayed, when they're going to be, because those could act as the catalyst to turn this price action around and turn Hedgic into something that's quite bullish. Let's try to GAN fan this as well. So in terms of the GAN, it's actually dropped out of that GAN fan. You know, I can do bottom to top here. It hasn't actually dropped out of this GAN fan. Not a huge fan of GAN lulls in this situation. But right now, you know, it's kind of between a rock and a hard place is the best way to look at it. You know, is being below the VWAP something that is bearish, as we've seen over here, or are we going to reclaim this VWAP and this is just kind of a trap? We are on this support level, so who knows? We'll have to see what happens. Can I chart if Haven is on here? Does look like it's on Bittrex and Shitcoin. No, this right here could be complacency leg for Haven. So I'd be very wary of that. You know, there's definitely a fair bit of resistance up here that it's going to have to get over. You know, trends on crayons. We're not looking at a green trend again. We do see once again that we've got this VWAP, which acted very clearly here as support. But right now, just keep in mind that, you know, this had quite a run, it seems. We're looking at, it's not too bad. Not too much upside. About 250, 260% of the upside. Can we get above this and continue on? Fuck yeah, I think we definitely can. But just looking at this objectively, you know, be worried here. Just because there are going to be sellers, you know, we really need to get above $9.22 or so, and that could start looking pretty good. Now, a lot of this, somebody asked, what does Bancor need to do to flip Uniswap trade volume? So, you know, my plan for Bancor growth is to increase the selection on the Bancor platform, for one. And I think that's very important. And two, you know, Bancor is actually working very closely with Arbitrum, which should bring like a huge benefit in terms of gas to actually using the protocol. You know, if we can get a lot of that stuff integrated, hooked into to level 2. I need to do more research on how that works, and if there's going to be like Bancor separately on level 2, if it's all going to be in level 2, you know, how that works. Increasing selection is important, though, because Bancor is not, even though they invented the AMM, Uniswap is the Kleenex of the AMMs. You know, if you got newbies that come in and they use an AMM for the first time, chances are is these guys are going to be using Uniswap, right? Because that's what they've heard of. So I think it's really important to start thinking of Bancor as liquidity as a service. Because of arbitrage, if the liquidity is there, the platform's going to capture volume. And because DeFi is so composable and we have all these Legos that are connected, we don't need users to Bancor to blow Bancor's volume up. We need more selection and we need more liquidity. More liquidity, of course, will come as, you know, if we can increase Bancor's price, if we can mark Bancor's price up to 15, 20 bucks, then we're 4xing the liquidity, 3xing the liquidity just on that alone, which will attract a lot more of this volume. But the more pairings we have on Bancor, the more Bancor we can actually get locked up staking, the more revenue the platform can generate to provide more efficient, impermanent loss insurance. And the more volume we'll actually capture from aggregators and other places like that. Liquidity as a service, though, for Bancor is big because we can offer that co-investment. So if you have a protocol that's pretty illiquid, you don't actually need a whale to come up and put up the Ethereum side of liquidity, and you don't have to do anything like that. Bancor actually, the platform itself will put up that side of the liquidity. So I think with Bancor, it's really important to identify and capture up and coming blue chips and DeFi, because as these projects grow, as they bring more volume, as they get their own, as they increase and appreciate in price and they become more well known, if Bancor can forge strong relationships with these communities as early as possible. Now, when I say as early as possible, there's a fine line here between hey, we just gave a shitcoin all this liquidity, and hey, this shitcoin has proven itself to have a lot of promise in the future, and now we're going to give it the liquidity. It's very important that we curate these potential future DeFi blue chips and add them based on, are they already heavily traded? Do they already have a certain degree of liquidity? Is the primary directional driver of these products on centralized exchange or decentralized exchange? There's a lot of factors that go into that. But if we can add the right projects, Rook is, in my opinion, a great example of this. Bancor stands to capture the long tail of those projects' growth. The exposure that those communities bring, the gratefulness, the additional liquidity in the Bancor platform, the additional volume on Bancor, etc., etc. Which runs first, Bancor or Badger? That's really difficult to say. It's difficult to time when these things really kick off. So it's just something interesting to pay attention to, interesting to keep your eyes on. So guys, I think we're gonna wrap up today's episode with that. Like I said, I really wanted to start doing these an hour and a half, because I am doing Delta Phi now on Wednesdays. I don't want to just eat up all the content. I don't want to eat up all the things I could talk about in one episode. I was thinking about doing some kind of other DeFi show too. Maybe it could just be pure education, how to trade charts, or maybe it could be an actual gem hunting episode. Something like that. So a good question from John Menace, or Meanest. Subo YouTube, Messiah, do you have your own channel where you stream? Yeah, this channel. John wants to know if it's worth it to stake Badger, BNT, etc. if you have smaller positions given the fees in the Ethereum network. Now the answer to that question is potentially no, because these things that you're staking have an APY. But it wouldn't make much sense to stake something if your position was small enough to where the proceeds you got from staking didn't even cover the gas costs after maybe a week or two. That wouldn't make much sense, because then you're staking why? I mean, you stake to make money, right? But here's the thing, people are speculating on Uniswap v3 when they don't understand that Bancor is in advanced stages of testing with Arbitrum, and the Arbitrum mainnet is going live in March. So Bancor has its own ace in the hole, when it comes to that level 2 experience. I will say, okay, final comment. We've seen a lot of level 1s do really, really well, and that's mainly because the scalability issues on Ethereum once again have been brought to light. I do think that the adoption, the release of a lot of these level 2 solutions is going to be something that kills some of the progress that those level 1s have made. It'll be interesting to watch, that rotation if and when it does occur. And I'm talking about things like ADA, things like Binance Smart Chain, you know, that have performed very well because Ethereum isn't scalable and because they've given degens the opportunity to ape. It'll be really interesting to see what happens to some of these level ones that have seen so much upside when Ethereum starts having scalable options for apes that don't want to pay a shit ton in gas. But anyway, guys, I think this went really well. YouTube seemed to be a good medium. If anything, I think that the chat part of YouTube is a lot more engaging. It's a lot easier to interact with people there. You know, it's not constantly crashing. After this episode is over, of course, you know, you'll be able to get in, rewatch the replay, anything like that. But I hope you guys enjoyed coming. Let me ask you one last time, if you are here and you enjoyed the stream, please hit the thumbs up button. Small way to repay. Also, give our Hero Labs channel a subscription. You know, all these future streams. That way, you know, you'll get notification when things are scheduled, when things go live. Make sure to check out Delta Phi this coming Wednesday. Yeah, the YouTube crowd's definitely a little bit smarter, it seems. We've had a lot better questions today. Smash that like button, guys. 154 likes. Smash that like button. Come on now. But thank you all for being here. Much appreciated. Be very careful with rotating. But right now, ask yourself those questions. If everything does run in March, are you where you want to be right now? Or do you need to go ahead and get in the right positions that you want to hold? I can't answer that question for you. So good luck. Until next time, we'll see you guys later.